Welcome to the show, everyone. I have a very special guest for you today, Raoul Pal, the co-founder and CEO of Real Vision Group. He's also an economist, investment strategist. He's also the publisher over at the Global Macro Investor. Now, but for those of you who are not familiar, Real Vision is a disruptive financial media brand. So they created it to help investors understand the complex world of finance. They've been providing a lot of value for people looking at business, looking at the global economy, in-depth analysis with real experts. And they have just launched Real Vision Crypto, which brings the best and brightest minds from the crypto industry for your viewing pleasure. So there'll be a link down below in the description where you can check out Real Vision Crypto. But Raoul, thank you so much for taking the time to come on the show today. How you doing?
I'm great, Lark. I can't complain. I'm here in the Caribbean. Life doesn't suck. And Bitcoin's almost at all-time highs, you know? What's there not to love?
That's it. Life's good. Life is good. Now, I think let's just go ahead and jump straight in. I want to kind of start talking about the macro stuff a little bit first. We're going to really dive into some of the crypto-heavy content, what big investors have been talking about. This is going to be a super juicy chat, guys, so make sure to stick around for the whole thing. Now, let's start off with this. What is your view right now on kind of the macroeconomic picture heading into 2021?
So I think economic growth is going to be slower than almost anybody expects. I think people are looking at the stock market and saying, look, everything's fine. The IMF, the ECB, the Fed, and everybody else are saying, it doesn't look that good out there because there's this big dichotomy between Wall Street and Main Street. And it's the average businesses that are getting killed in this situation. The hairdressers, the restaurants, the local taxi drivers. This is a really, really bad situation. That's the largest part of GDP. So I think growth, particularly as the virus is at full flight right now, and I think it's only going to get worse, particularly in the US over Christmas and New Year, because the US hasn't gone into lockdowns in many places. In some places it has. So I think this is a story that's going to continue. Obviously, the vaccines roll out over time, but over time being the key thing here. So I really am worried that Biden has to come in and almost shut down the country in January. So I think economic growth is slower than people expect. I think the recovery is slower than people expect. I think everybody is betting on a fast reflation. But if I look at most of the other recessions, they always come out slower than we expect. The markets may recover, but the central bank, and this is the key to the equation, is generally still active, either cutting rates when there were things called interest rates. I don't know if you remember that far back, or printing money to try and keep this, and stimulus in terms of fiscal stimulus. So this is what I think lies ahead is regardless of what you see the stock market doing, that is not the real story. And the central banks understand it, and they and the governments are going to have to continue to take more action all the way through 2021. So if there's a big economic surprise, it's that the economy is more sluggish and remains negative at this kind of -3%, -5% year-on-year GDP growth, which is, put it in perspective, worse than the Great Recession. It would be the second worst recession since the Great Depression. We kind of forget that because we get this obfuscation of numbers where the quarter-on-quarter growth is like the economy's down 30%. Oh, it's now up 30%. You don't look at it like that. It's what is the year-on-year trend rate of growth? And it's negative, and it's going to remain negative for longer than we expect.
That's I think very worrying for investors because we're living in this fantasy land right now with all this money pumping in from the central banks and things. So in terms of I guess looking at the dollar, right? I mean, it's been a record year for the dollar in terms of inflation and all the craziness that we've seen going on. I mean, should investors basically be fleeing the dollar right now?
See, if I've got one call wrong, I've had a pretty good year with calls this year, but if I got one call wrong, it was the dollar. I've been a dollar bull for 6, 7, 8 years now, and I've been in that trade all the way through, basically. I expected the dollar to have been stronger this year, and it's been weaker. We're getting to the point where I'm going to really question my thesis and say, okay, the dollar has turned. I don't think it has, actually. I think we've just had a weak period within a range, but I could be wrong. But that whole dollar setup is basically the most important thing of all. If the dollar is stronger from here, let's say people revise down their GDP growth and the dollar catches a bid for next year, well, that slows down the global economy again. Everybody's telling you they can't deal with a stronger dollar right now and the dollar funding shortages that the foreign central banks and particularly the foreign banking systems Europe and Japan have. If it gets weaker, okay, that's interesting because it increases the inflation narrative, which increases the valuation of things like Bitcoin and gold, but it also sets off emerging markets where they can do really, really well. And those things have underperformed for the last 15 years. So we're setting up for a phase now. The dollar, if time horizon matters here. So I don't think this is resolved over this coming year. But when it is resolved, the dollar will weaken. All the central banks want it to weaken. When it does, you can buy emerging markets and go to the beach for 10 years.
So for investors looking at the stock markets, maybe U.S. stocks not so much a go in this situation, or maybe particular sectors like tech and pharma, obviously emerging markets, like you just said, become an interesting play for investors as well?
It's difficult to know. I mean, the equity market has a lot of correlation to the central bank balance sheets. So it seems to be the second best asset in offsetting the growth of the central bank balance sheet, Bitcoin being the best. So if that environment continues, maybe equities go up. Now, obviously, we're in a new paradigm now of ridiculous valuations, and we're all grasping to try and understand this world, and we don't really know. How do you value a tech SaaS business model that has 80% margins and no debt? I mean, could it be worth infinite? I mean, that's what it seems the market is saying right now. So look, it's a really complicated world. I don't like the equity market for that reason, is I can't explain it. I don't understand it. Now, if you talk about emerging market equities, whole different game. But that kind of US-centric, massive structural bull market we've seen, I'm just not comfortable with it. And that's hard. And that means I won't short it and I won't buy it either.
Interesting. Right now, we're seeing the IMF. They've came out recently and made a very, very big calling for a new Bretton Woods moment. For all the political science nerds out there, this was, obviously a massive thing back in the day when the Bretton Woods originally happened, post World War II, and the gold standard and all this kind of stuff came out. Now the IMF is out there calling for that new Bretton Woods moment. So what are your thoughts on this? I mean, is this going to be potentially a big catalyst for a central bank digital currency? Obviously, we're not going to be pushing back to a gold standard. So what do you think the game is here?
Well, they've made it quite clear it's the issue of the dollar that we talked about a minute ago. So to frame it, the dollar is 25% of world GDP, the US, but the dollar is 80% of all trade transactions. So its impact is so big that a country like New Zealand is beholden to the dollar. South Africa, Argentina, Brazil, particularly these exporting nations. So the dollar goes up or down, it makes or breaks economies. And the dollar funding shortage, because 25% of GDP, 80% of all trade, means there's not enough dollars unless the US runs huge deficits, which is becoming complicated and scary. So that world, the central banks all got together and said, we need to change this. So if you were to logically look at it, it all came out of the Facebook Libra project when they said, we want to launch a basket currency that includes dollars. But why? Because if dollar is not the denominator, then something like money suppliers. So it's a very stable currency that you can use in New Zealand and I can use in the Cayman Islands and my cousin can use in India. Okay. The central banks went, whoa, that's going to attract a lot of money because that's bloody useful. Mm-hmm. So what the IMF is talking about is two things. One is looking at maybe creating a basket of currencies. They talked about this with their SDRs and stuff before, but a basket of currencies where the dollar's part of it, but the dollar's weighting, let's say, is not 80%, but maybe 40%. Okay, so that's a devaluation of the dollar. But it creates a new currency system which is less volatile. It's actually probably very good for the world. And they could only really do that with central bank digital currencies. The other thing they talked about in the new Bretton Woods was, okay, we understand the world is screwed right now and everybody needs to do fiscal stimulus. Now, we're in a world of competitive devaluations. Why don't we stop that and everybody make up a number, 50% of GDP for fiscal stimulus. The central banks all buy it. We do a one-off and we fiscally stimulate the world. And if we do a one-off and then let's say we agree only to increase money supply by 2% a year, Well, then you've got a world currency, which is like John Maynard Keynes's idea of Bancor, that's functional. Now, governments being governments will cheat on it and it'll destroy it in the end. But it actually is a very interesting idea. So when they're talking about a new Bretton Woods, for you and I, we don't know the outcome, but what we do know is there is a movement for gigantic financial system change. And that all came out of Bitcoin. Bitcoin was the driver behind all of this, and they all get it now. And the world is about to change beyond any of our comprehension, and it needed to, and we all knew that.
It's a very, very exciting time to be an investor. Really, Bitcoin kicked the hornet's nest, right? And in a way that it just kept being this thing that you can't look away from, you can't keep ignoring because it just keeps existing. It keeps not dying, right? And I think this is an interesting time to move into that conversation about crypto now. You recently announced that you were selling all of your gold for Bitcoin and Ethereum. So what was the rationale to be, I guess, getting out of gold and getting into Bitcoin?
Well, look, I'm a simple macro guy. I distill everything down to the simplest possible thing. I look at the chart of Bitcoin versus every single asset, and it's breaking out versus every single asset. So what it suggested to me that Bitcoin is the single most dominant trade I've literally ever seen in my entire career. So if it's that, and I'm a macro guy, I'm not running a diversified portfolio, I'm not a pension fund, I'm a macro guy. When a bet looks so dominant and so large and so powerful, owning any other asset only dilutes that. And if I'm comfortable with that bet and I can structure it that I can take the risk that I want to take, then I want to put everything I can into it. And that I've never done before. I mean, I've had some big bets in the past. I had a big bet in bonds last year, it paid off. And I've had a few of these kind of bets, but nothing like this where I've gone, there is almost no point doing anything else, which frustrates people. They're like, Raoul, you're a macro guy. Talk to me about, the Russian stock market. I'm like, I don't care. Right? There's no point. This is so dominant. And that will change. Emerging markets is on my horizon as one of these great trades because Bitcoin trades in cycles and the emerging market cycle is going to be phenomenal. But right now, it's eating the world.
That's it. You have to go where the trend is, right? And there will be, of course, some bear market in the future. And I guess this is one interesting thing that I keep hearing from people is that we have all these big investors coming in, this institutional money's coming in, and that Bitcoin, the market has fundamentally changed. And I feel like every time that you start hearing people saying, well, things have changed, it's different this time, right? It's one of those situations where, well, is it really different this time? So, I mean, what do you think when you hear this kind of sentiment being pushed around that this time is different because we do have this big money coming in, there won't be some dramatic bear market and stuff?
It's, I think, gigantically different. Firstly, look at the acceleration of this post-halving versus the previous one. It's faster, which none of us expected, right? We were all expecting the slope to be less. So far, not true. Now, that's just, it's early days. So that's interesting to me. Also, the structure of the market before was retail investors. Now, here we've got institutions, some of them will buy and hold, but as you bring in hedge funds, you'll start bringing in new supply into the market because they trade it more and they'll trade it in big size. So they'll be selling some, buying it back, selling some, getting short. That's a different structure than we used to. What that actually does is lower the volatility of Bitcoin over time. So the texture and feel of Bitcoin will be different. Over time, the next cycle, the returns will be significantly lower in terms of percentage returns. This one, I have a hunch that this will be bigger than anybody imagines. Everyone's like, well, plan B, he's got 250,000 or 280,000. Others have got various levels between 50 and 150. But if I just take the log chart and put regression lines on it, if it gets to 2 standard deviations overbought, which is roughly where it got to the last 2 peaks, that's $1 million. Now, is that's doable? Big. I don't know, but what I do know is when you're forcing an elephant into the bathtub, things are going to change, right? And that's what we're doing here. We've got no supply, and we've got this kind of industrial vacuum cleaner of Bitcoin coming in, which is the institutional space. but it will structurally change it. We will see weird things like quarter-end markups or markdowns. We will see rebalancing. We will see all of these things that we've not seen before because it's not been a feature of the retail investor. So the structure of the market is changing, but I have a feeling that this is going to be a little more shocking than people imagine.
Wow, that's a big call. $1 million Bitcoin, and it's obviously a number we've thrown around on the channel before, and it's crazy to actually think about it because I feel like a lot of investors they struggle seeing this big picture kind of playing out. Where if you go back a few years when Bitcoin was $1,000, nobody could have imagined it going to $20,000, but now here we are at $20,000+, whatever it happens to be at right now, and the idea that we could see Bitcoin going to this crazy valuation, I mean, that's almost twice the market cap of gold if we get to $1 million.
Well, where's gold at that point? Gold has probably gone up significantly too. Now, and again, the $1 million thing, that regression line, just means there is a probability. It's not really my forecast. I'm more comfortable saying, another 10x from here at, 250,000, that kind of makes sense. All I'm saying is the probability to me is not an undershooting, it's actually an overshooting.
Interesting. Very, very interesting. Now, you've got this incredible window into the world of these big money investors, right? You're on a first name basis with some, really incredible big money investors. So what are these guys saying behind closed doors about Bitcoin? I know we've had some big announcements this year from Paul Tudor Jones and stuff, but what are they kind of saying, behind closed doors? What are they kind of thinking about Bitcoin right now?
Well, the dirty secret is most of these guys held it in their own PA accounts. Because they can see it, right? They just weren't able to put it in their funds. The structure wasn't there. The futures, that helps. But some of them want to physically store it. They want a custody. They want it in their prime broking accounts, and it doesn't yet fit in. But that's changing. So they are all working on it. I'm also hearing incredible stories of these massive hedge fund platforms trying to buy every single independent crypto hedge fund to add it to their platforms. So that's new news that is big that I'm picking up from everybody, is that you saw the announcement from Alan Howard, who's a friend of mine and one of the most famous hedge fund managers in the world. I mean, he's just, invested in that platform. He's been in Bitcoin for a long time, and that's not the only announcement. I mean, so we're going to see this everywhere. And my guess is we'll see it from Millennium, we'll see it from, Balyasny and all of these big hedge fund platforms that they're going into the space. Again, that will mean most of these funds are small. They're like $20 million funds. Mm-hmm. And suddenly they're going to be $200 million funds. And then their impact, it's the structure of the market is going to change with all of this, but it's very exciting.
Absolutely very exciting. It's this tsunami of money is coming in, right? And it's
the wall of money. I keep telling everybody, I've seen this before, and I keep pounding the table. I saw it with the commodity markets back in 1997, 6, where Goldman built the Goldman Sachs Commodity Index, and I was there at the time. They built this indices and then went out to all of the pension funds, asset allocators, and consulting firms and said, this is what it does to your portfolio in terms of diversification and performance enhancement. So they went and sold it to all of them in the way that, in the language that they understood. They all piled in and they invested something like $300 billion went into that index over the next 8 years. I mean, huge money. And the commodity prices just took off like a rocket ship.
That's the thing. I think a lot of people, it's hard to even understand these numbers, but there are literally just trillions and trillions of dollars, mountains upon mountains of money sitting out there in, all these different angles of the market, that even 1% of that money coming into Bitcoin is just going to go beyond belief.
Yeah, because there is no supply. This is the fundamental issue here. There is no supply to deal with that kind of demand. So you get upside dislocation in price. And, you see it on days like yesterday and the day before, 10%, 2 days running. I mean, this is an asset. It's not a single stock. It's not a penny stock. This is a whole asset class. Asset classes don't do this. And that's the structure of Bitcoin that does it.
Very, very interesting. To what extent are you seeing investors taking an interest in crypto assets beyond Bitcoin? You know, are we seeing these big money guys start to talk about Ethereum, for example, as well?
Well, the Ethereum futures launch on the CME, that's a big deal. Most people that come from the macro space that I'm involved in understand the Bitcoin narrative, and then they want to understand further out on the risk curve. That's how we all do this. And I'm going to write some tweet thread about this at some point about people just don't understand risk curves. So what happens is you have three preferences: liquidity preference, time preference, and then risk preference. So liquidity is US dollar or US treasuries, where you get the ultimate liquidity. That's your safe haven. Time preference is when you have some good enough understanding of an asset that you can hold on for it for a period of time. It's not a trading asset, but investable asset. Then you have the risk curve. And what happens is usually once you've made the decision, let's say I want to buy the Goldman Sachs Commodities Index, you then start saying, how can I make alpha now? And you start looking further out the risk curve. Do I want to add a further weight to wheat or copper or whatever it may be? In this case, Bitcoin is the gateway drug to new sources of alpha. The new sources of alpha are Ethereum and the entire digital asset space. And these guys will not stay just in Bitcoin. I know the Bitcoin maximalists don't like that narrative, but it's not all about the reserve asset, the pristine collateral that I've talked about. It's actually they want an ownership of a new space, and they understand probabilistic analysis and understand what kind of risks they want to take. So, when you look at the risk curve within this, the furthest out the new DeFi projects, because they don't get adoption, they might fail, it's not tested. So that's where they take the least amount of risk. Ethereum is the next one. And my guess it is much less liquid than Bitcoin. And I have a feeling that Ethereum will massively outperform Bitcoin in this cycle.
Very, very interesting. The last question here for you. We've seen U.S. regulators back and forth, dragging their feet, introducing, tough regulations and all this stuff. And I think the one big thing that people keep hoping for is the Bitcoin ETF. That's seen as one of these things that's going to bring in even more money to crypto. It's going to get these funds off the sideline that might otherwise be waiting to get in. So do you think it's realistic with the way regulations have been going in the US recently that we will get a Bitcoin ETF any point in the near future?
Yes, look at the regulation. The regulation is all about institutionalizing Bitcoin. The custody, the KYC, all of the things that bring it into the financial system. Again, half the Bitcoin community utterly hates this thought, but they also want the money to come in. So tough shit. You have to have one or the other. Now, there will be a grand compromise, and not all secrecy, privacy, and independence will be taken away because it's a technology. So somebody else can develop something else. There's ways around everything. But at its core, it's going to get regulated. That means the ETF will come. They've already got a futures contract. So it's going to come. And, we had on Real Vision, the founder and CEO of the largest RIA business in America, Edelman Financial Engines. And he's got like 280 billion under management. That industry has, 3 trillion or something crazy. And he's like, I'm educating all the RIAs waiting for the ETF, speaking to the regulators saying, we want the ETF. The regulators know. Bitwise, they're working hard on doing it. They just launched their multi-index, their multi-cryptocurrency index. They're working hard on it, as are a number of others. It didn't surprise me that BlackRock started making comments. It's coming. It's coming soon. And when it comes, it's going to give another whole leg into this space, because there's a lot of people who aren't comfortable paying massive premiums for grayscale.
That's it. Raoul, very, very interesting chat. Thank you so much for your insights. I'm sure everybody's learned a lot through this conversation. It was short and sweet and full of information. So thank you so much for taking some time out of your schedule to come and have a chat with us.
Not at all. If anybody wants to find me, I'm always active on Twitter chatting. That's where you and I met. So at Raoul, Raoul GMI. And if you love crypto, we've created the world's best crypto platform, which is realvisioncrypto.com. And it's free as well. So you just need to stick your email address in, and we've got the biggest names, the most incredible analysis of the entire space.
Fantastic. I'll leave links to both those, both your Twitter and Real Vision Crypto down below in the description too. So guys, go check that out. It's really great content, really great value. So Raoul, thank you so much.
Thank you. Really enjoyed it. Have a great weekend.
You too.